Hi and welcome. You're watching Weekends with Ventura. I'm Vidhata Bede, and today we are going to talk about gold. As you know, equity markets have been jittery, they're going up and down, and investors are really clueless about whether or not they should put their money in equity. At the same time, RBI has been slashing policy rates, and as a result of that, investors are really worried about the future course of interest rate scenario in the economy. Real estate is really a very big asset class for many investors, and not many of them can look at investing in real estate at this time. Considering all these factors, gold is looking really bright and it's shining. To talk about gold and know where is it headed, we have on our show Mr. N.S. Ramaswamy, Head of Commodities at Ventura Securities. Let's welcome him and ask him some questions. Hi, sir.
Hello.
How are you
Hello.
doing?
Hi, Vidhata. Yeah, fine.
Yeah. So, as you would appreciate, in India, gold prices have just hit their all-time high. But in the international market, they are still shying away 10-15% from their all-time highs. So, in your sense, when do you expect gold prices to go up in the international market?
Yeah, Vidhata, rightly said. First of all, the topic has been good as an asset class, which you have chosen today for the discussion. Gold in the MCX futures in India, as just now witnessed on 18th May, roughly, on that day, we saw a new high of around close to 47,980 or so, close to 48,000. Whereas in dollar terms, Vidhata, you must have seen that now currently it was just hovering at around $1,700 per ounce.
Correct.
But then this bullishness of 1700 is also not to be ignored, because if you compare YOY year on year, right from around close to 1308 or $1309 per ounce, it has gone up to this mark, which is roughly a calculation of close to 34% rise in a matter of year. So
Absolutely.
the all-time high, Vidhata, to answer your question, the all-time high of gold has been in way back in 2011 in COMEX US gold dollar terms, which was around 1923, 1924 dollar. So as you would rightly put it, as maybe 15%, 18% rise can be expected. Yes, even a jump from here to close to 20% should cross the 2000 mark, also magical mark. But we need to probably wait for some time for that.
Okay. And could you please elaborate on this? As in, what makes you make that statement that dollar will, gold will go over and above $2,000 mark?
See, basically, it will slowly inch towards that, and we are very sure to witness the breaking the high of $1923, which is why we said that could be a magic number of 2000, which could be tested close to within 1 year's time from now. To elaborate on that point, basically, it's a question of the opportunities that is being thrown open through the global dynamics. We see that for the past few years we have been witnessing that support. That is why in the last year itself we saw some 34% jump. So that being the present situation, added to that is something like a pandemic, which we are all witnessing across all asset class basically. But compared to all other asset class, gold stands out to be a beneficiary in this entire in this pandemic. So the financial and any geopolitical uncertainty that clouds around with some low interest rate regime which is going on across all the global markets, across all the countries, it basically would carry or create an investment demand towards gold. So thus, that is the core thing which I wanted to express as one of the fundamental reasons that could be supportive. Vidhata, one more thing is, immediately to support this point, we would like to show the tabulation of the interest rates which has fallen in US the way over the period of 8 to 10 years. And what we would do is we would when you go through that chart, you will also be able to visualize and see how gold is versus the interest rates. Those comparison chart is also now depicted.
So this is how fantastic.
Exactly. So this is how one of the core reasons are there. And to add up to elaborate on this point, next comes Vidhata is the the central banks, the net central purchases of all the central banks has not been fallen at these difficult times of last 2-3 months, or even the global meltdown or some recession times. What has happened is at least the net purchases have been maintained. Okay.
Correct.
So it has not shown any panic as regards the net central bank purchases. It has only for the last 1 or 2 quarters, a little bit of lesser numbers have contributed towards that. But the net purchases it is completely robust, one would say.
Correct. Correct.
So that is a very sound fundamental support for gold. Then coming to the uncertainty of this COVID, we can also see the central bank's intervention that could have happened, and they bring about all sort of financial reforms and things like that.
Correct.
And on the geopolitical front, we are seeing US and China again conflicting. So any matter which comes about conflicting in nature is always going to be very supportive for gold per se.
Okay, so to just sum up what you just said, it means wherever there is uncertainty on the global landscape, gold would shine.
Absolutely. Even to add further one point, sorry to interrupt, but then one point which strikes me is about even the US. When we talk about US in this table, when we saw US has really got the highest gold reserves, like close to 8,100, 8,200 tons. But then now at the present situation, looking at their debt scenario, even that unemployment scenario, which has gone up so much, which will be a lot of pressure on the dollar, and this will be a challenging times for the currencies to perform on at least the USD, which is one of the benchmarking for the gold. So that is an added point which I would like to say.
Correct. Makes so much sense. Sir, now 2 quick questions for our Indian investors.
Yeah.
What is the outlook of gold in INR terms?
See, in INR terms, basically, one has to understand what happens when the change reflects in your currency. One reflection on the currency is the movement of INR versus USD. That is a very valid point. The other one is the COMEX gold, as I told you.
Correct.
So when we just now spoke about COMEX gold hovering at around 1700 presently, and we are anticipating somewhere around 1900 or 2000. Which means it could be an 18 to 20% jump from those terms.
Okay.
If it is 18 to 20% jump in dollar terms in COMEX, if it is 300 or 400 dollar USD, that will go up. It translates to almost 25 rupees for every jump in the USD per ounce. So which you can correlate it as, maybe if it is 400, we can expect a 400 into 25. It is close to around 9 to 10,000 rupees from the present levels. So the present level of gold in INR rupee is around 46,800, 46,700.
Correct.
So you can expect this price levels to go up. Yes, now because of the present expiry of the June contract, it is slightly fallen down and $1697, $1,700. So answering rightly to your question on the rupee terms, every rupee that currency changes, you have an impact of almost 500 and 550 rupees.
Correct.
Which means Vidata, 74 rupees rupee USD, INR USD.
You mean USD to INR?
USD to INR is around 75.6. If the bottom side is 74 and the depreciation side is much weaker, rupees expected maybe around 77. You can just roughly imagine a jump of close to around 3 bip points. Then that means, which is translating into 500 into 3, which will be around again 2,000 or 3,000 rupees. So the supportive factor for gold in rupees would be 44,000 on the downside, and immediate we should be expecting, after crossing 48,000 levels, we should expect around 50,000 in a matter of 1 quarter from now. And for a 1 year horizon, if you take that same 2,000 or close to $2,000 in gold, in that case, rupee terms, it should be close to around 55,000.
Correct. So going ahead, sir, I would like to now ask you, suppose somebody wants to invest 100 rupees fresh. In terms of allocation, how much do you think should be allocated to gold, and what is the risk involved in investing in gold at this time? You have already given us a downside, but still expecting the volatility factor, how much in percentage term do you think one should invest in gold? Suppose I have to deploy rupees 100.
Absolutely. There is a very easy route that is available for through the futures market, where the delivery is in place. Like there is all sort of denominations available. You have 1 gram gold available, smaller denominations available.
Correct.
So to your question, it could cater to various segment of the mass who would be looking out for a smaller 1 gram, 8 grams, 10 grams, and even a kg. So that being the case, the upside would be the safer allocation should be close to around, exposure should be close to around 15%, which is right mix that one could look out for.
Correct.
Besides equity and debt, yeah.
Correct. Makes so much sense. Sir, one final word for investors. What you would like to advise investors during this pandemic time? Because although we all have been saying that this phase will pass, and you have to be very positive in your attitude when you are witnessing such an unprecedented situation. But given all said and done, what would be your final word to our investors?
I would say stay cool, and preferably when the times are very uncertain in nature, various asset classes would give their own properties are there for each asset class to describe in such situations what is to be done. It could be, when it comes to equity, we talk of sectors, we talk of industry which is likely to perform post COVID and immediately after lockdown. So in such scenario, the advice to everybody would be probably stay put with your cash with a limited calculated investments in any asset class that you do, okay, with the risk element totally in your favor, looking for going for a lesser reward, not a problem, but lesser risk is better, is the advice that I would give, which means close to remaining on cash would be the advice at this point in time.
So have dry powder and invest when markets fall, and always diversify and consider gold as an important diversification asset class.
Absolutely.
Thank you, sir. And viewers, I just hope you had some key takeaways from this session. As Mr. N.S. Ramaswamy rightly described, one has to diversify irrespective of what the market conditions are. And under current market conditions, gold is definitely poised to go up. But then you can't go all out on just one asset class. So 10-15% investments in gold definitely warranted.
Investment in securities market is subject to market risk. Please read the offer documents carefully before investing. We Ventura Securities Ltd, its analysts and associates, with regard to the video, hereby solemnly declare and disclose that we do not have any financial interest of any nature in the company. We do not individually or collectively hold 1% or more of the securities of the company. We do not have any other material conflict of interest in the company. We do not act as a market maker in the securities of the company. We do not have any directorship or other material relationships with the company. We do not have any personal interest in the securities of the company. We do not have any past significant relationships with the company, such as investment banking or other advisory assignments or intermediary relationships. We are not responsible for the risk associated with the investment, disinvestment decision made on the basis of this video.